This segment is directed specifically towards active duty service members. Active duty service members, you have an opportunity to accumulate wealth a lot sooner than a lot of other people in life. Typically, the deal is you get out of school and then maybe you go to college, or maybe you didn't go to college and maybe you enlisted directly. And then you get a job, and then you have to work to be able to afford. You got to be at least 2 years in the workforce to be able to afford to buy a house or to qualify, actually. So most people are getting started later in life. If you are working active duty, then you should be getting on your LAS, you should be getting a housing allowance, which is a tax-free BAH's housing allowance that goes basically towards your housing. So that can be applied either towards rent or towards a mortgage payment. And with that money being tax-free, and in a lot of markets, you can actually get a mortgage for cheaper than what you would afford in rent for the exact same, even nicer place in a lot of cases. And since the VA loan allows you to purchase a house with no money out of pocket, you're actually able to make payments on that mortgage using your housing allowance. And so basically taking your pay, your tax-free housing allowance, and applying that towards a mortgage, and that pays down the principal in the mortgage. Also, your house is appreciating as well. So if you're renting a house, you're paying for somebody else to accumulate wealth because their house is appreciating while you pay their rent and you're paying down their principal. If you are basically, you own your own house, then that house appreciates each year an average of 3 to 7% depending on your market. Now there are some downturns sometimes where just like the stock market, it goes up, it goes down. The housing market, we saw a huge crash back in 2008 when there was some irresponsible lending going on. And there was just a huge foreclosure crisis, and that's what caused values to come down is the amount of foreclosures, and people were selling houses cheaper and banks were selling houses cheaper. So that's what made the housing market crash. That probably isn't going to happen to that scope ever again, just because there's been a bunch of new guidelines that have been introduced. ATR is ability to repay, QM is quality mortgage. Without boring you with the technical jargon, basically it just says that you have to prove that you can afford to pay back the loan in order to get a loan these days. It didn't used to be that way, believe it or not. So the VA loan allows you to get into a house sooner than most. The LES housing allowance allows you to take that payment and apply it towards your mortgage and accumulate wealth. And after living in a home, if it's a $150,000 home and it appreciates at 10%, then that's $15,000 you made in that house. A lot of repeat clients. I've been doing this since 2004, so a lot of my clients that have bought homes on active duty near base, by the time they're ready to move, they refinance into a conventional loan because they've accumulated enough equity that now they're at 80% loan to value. So now they're on a conventional loan. They've established their VA entitlement, and now they can go buy another house that they're going to live in at 100%.